Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. Last week, US equity markets continued their upward trajectory, led by the high-flying Dow Jones, which locked in a fourth straight week of gains. The rally has been supported by robust earnings and, of course, optimism around Fed rate cuts, which received some additional support on Friday night from the University of Michigan's Consumer Sentiment Index. It fell to 67.4 in May, which was the lowest level in 6 months. And what we do know is consumer spending is a key driver of the US economy. It actually accounts for about 2/3 of US GDP. So what is stopping the Fed cutting rates? Well, we do know the Fed has said, and it has made very clear, it will not cut rates until inflation makes further progress towards the Fed's inflation target, which puts the focus squarely on Wednesday night's latest inflation report for April. Let's take a look at the chart of the S&P 500 and the NASDAQ to see how this inflation report might play out in terms of our chart pattern we have been following. Now, the rally from this April low in the S&P has gone a little bit further than we were expecting. We were thinking perhaps around 5,200. It has overshot, which we warned about that possibility over in last week's video. It hasn't yet negated the idea that there is still a possibility of this wave C lower in both the S&P and the NASDAQ. Now, what could possibly cause that wave C to unfold? Well, I think there's a couple, or one main thing we need to be watching for, rather. It is the US CPI number. The headline and the core are both expected to see modest declines. Now, that would probably give these US equity markets a kick up towards these all-time highs before another push towards, potentially for the S&P, we could see it trade up towards 5,400. But an unchanged or higher than expected, particularly on the core measure, would potentially be the catalyst for this wave C leg to unfold. Now, for me, you have confirmation that a wave B is in place if we were to trade much below 51.20. So much below this level here, I think you've got confirmation that a wave B is complete and that wave C down towards this area here is underway. Once again, we'll be looking to buy this area. We don't see this as a reversal low. We see this as part of a correction in a very strong uptrend. For the NASDAQ, much the same story here. It has gone a little bit further than we expected the rally from the wave A low, but it hasn't yet negated the possibility of a wave C leg lower. And I think that will depend on whether this, as I mentioned, inflation number on Wednesday is hotter than expected or in line. An in-line number, then we probably take out this 18,464 high, push up towards 18,800 perhaps. And if we were to see a firmer number, we would probably see that as a catalyst for a leg lower down towards this area. Once again, we're looking to buy this area here. The confirmation that a wave B high is in place would be a break below this support area here. Let's say that's coming in around 17,700-ish. So keep an eye out for that this week. But in a nutshell, a lot is riding on the CPI figures, and I think it will determine whether we do see that leg lower in the S&P and the NASDAQ, or alternatively take the next leg higher up towards new highs. Thank you for listening and have a good week ahead.